see the sun, I'm rising up, I feel the love now, oh, it's in my vision. Didn't know I ran around, and I got lost, but now I found it, well, I can't shake this feeling. Oh, it's gonna take me a little while, just to get my head around this moment. But I can see the sun, I'm rising up, I feel the love now, oh, it's in my vision. And it's telling me run, 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 and don't give up. And it's telling me run, 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 and don't give up.
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. How could you watch a bunch of puppies and not smile? Every time I see that, it just makes me happy. Today, we're going to talk about two really interesting stocks today, so we're going to get right to it because today, this is the daily NASDAQ Stock Update. Thank you for joining us today. We have some really interesting stocks to talk about today. We talk about interesting stocks every day. And one time somebody asked me, they said, why do you always say that you just have interesting stocks? Don't you have any bad stocks that you want to tell us about? No, not really, because there's plenty of bad stocks that are out there. We want to talk about the things that are good, not the things that are bad. So today we're going to talk about Kraft Heinz Company. Everybody loves Kraft macaroni and cheese and Heinz ketchup. I hope you do. Then we're going to talk about KLA Corporation. It's interesting. Did you know that KLA stands for Keep Looking Ahead? Very interesting name for a company. So let's get right into it and talk about these different companies today and how that they can fit into your retirement strategy. I want to clarify just for a minute before we get into this. I want to clarify this because this has come up a couple of different times. Why do we do this every day? Why do I come on here and talk to you about different stocks? Because I'm not talking to you about day trading, not at all. I am a negative proponent of day trading. I don't think that it works. Let me tell you, let me just give you a piece of advice from this standpoint. If day traders were making so much money off of their concept of trading, they would never give it away. This is the reason why. There was actually an anomaly in trading that did make profits. It was called the dogs of the Dow. And at one point in time, it worked out really well that the worst stocks that were not paying dividends in the Dow Jones Industrials were purchased, and those actually ended up paying better. Now, it's kind of reversed around. The dogs of the Dow actually refers to dividend stocks at this point, but that's another different story. The whole idea is the reason why that it stopped working is because the person that came up with the concept publicized it. Then everybody started to use it, and it didn't work anymore. So if these people who have day trading concepts available, if they really work, they would keep them secret, and they would be richer than Warren Buffett right now. Now, yes, I understand that there are some people out there that just like to teach. And I'm not saying that day trading does not work, because it does work if you have the time to do it. If you actually want to make it into a career, it is a career. I'm going to give you two pieces of advice on how to look into this, because if you've ever thought, and I know a lot of you do, because a lot of you have Robinhood accounts and you're out there buying stocks and you don't know what you're talking about, excuse me, I don't want to put it that way. I don't want to say that you don't know what you're talking about. What I want to tell you is that you don't know what you're buying. And that's why you need to be listening to this show, because I'm going to tell you about the different stocks. But if you have an interest in day trading, there's two things that I want to give you a piece of advice on. Number one is go over to Quora.com. It's got an app. You ask just different questions. Put into Quora day trading and read some of the comments. These are real people who have actually done it, and they will give you their opinion. There's some people that do make money off of it, but the majority of them don't. And the other thing that I'll point you to is go to Google Scholarly. Put it in. If you can't find it, put it in Google Scholarly Works. And it'll bring up a page that you can put into a question about day trading. Just put in day trading and then look at all of the scholarly articles that are on day trading. And you'll find that what's going on with day trading is there's several different studies which have been done by independent research that says that 2 out of 1 or 1 out of 2 people are making profits. That means let's take 3 people. 2 of them are not making profits. 1 of them are. So that's a 66% chance of failure. If it was going to rain and there was a 66% chance of rain, would you keep an umbrella with you? Probably you would. So I'm here to tell you, though, about some of the different stocks because I think that the stock market is exciting. I think that it's got some great stories behind it. And that's really what I want to talk about today. So let's get into it and see what's going on from this standpoint, because the companies that we're going to talk about KLA and we're going to talk about Kraft Heinz. So let's get to it. Okay. The first company that we're going to talk about is KLA. Now, I told you what that stands for. It stands for keep looking ahead. It's a very positive minded company. What KLA does is they manufacture the monitoring process for creating microchips. And they have a unique system. They occupy 50% of the market of monitoring the manufacturing of microchips. So if you looked at all the different chip makers KLA is used by every single chip maker that exists. This stock was up about 1.5% today. And if we look at actually what the stock's been going on, let me click the right place here so we can keep going. All right. Remember, when we're looking at stocks, we want to look at 3 things. One thing is that we want to look at the earnings per share. How's that working out? Then we want to look at the stability in the market. Then we'll look at also how the company is competing. That tells you whether this is a good stock or not. Now, remember, I'm not here to tell you about day trading or not, but if I describe to you a stock that you say, hey, I like that stock, one of the best strategies that you can use if you're accumulating assets in stocks is buy it on the dip. If you like a stock, buy it on the dip. You're going to keep it for the long term. And that's the whole concept behind making money on these different concepts that I'm giving to you. Okay, so the company that we're talking about, KLA, a year ago, this should be September the 15th. I didn't change the date on that, but the price is $145.98 back on September the 15th. And when we go fast forward to today, this stock closed at $180.76 per share. So it's up, 23.87%. Now, also, let me back up just a minute. Hold on a second. I want to show you something. Let's back up just for a second. Let's bring that back up here. All right. Look at this for a second. We saw a really big drop here at the beginning of September. Now, anytime that a stock has a drop of around 20%, you're getting into correction territory. You have to understand why that's happening. Is it because of competition? Is it because of whatever reason it is? So that's what we're going to do. We want to look real quick at what the news is and why this particular stock is dropping. As a matter of fact, if we look back, it dropped 19.05% at the beginning of September. And the reason was because of trade war restrictions. The Trump administration, not just the Trump administration. Yes, I know the Defense Department is part of the Trump administration, but the Defense Department is behind this restriction. And when we look at what KLA does, KLA has a unique monitoring system. And what the Defense Department is doing is saying that that system will be restricted, possibly restricted in trade with China. And also, I don't know, perhaps even Taiwan. But the thing I want to point out is that 52% of KLA's market is not in the United States. It's in Taiwan and China. So that's why we saw the market, the stock of this this stock of this company, if I can get it out, the stock of this company dropped 19.05% at the beginning of the month because it could face potential restrictions overseas. Okay, what's happening with the earnings? How do we look at that? We look at the earnings per share. We try to look at the historical record of it and see what's going on. Now, remember, as I go through this stuff, I've told you this a million times. If you've listened to me once, you've heard it a lot. The past performance is not a guarantee of the future results. But when we start to look at earnings per share, if you don't have a good history of earnings per share, you don't warrant being purchased as a company. So what we want to do is we want to look at the earnings per share of these different companies and see how things are stacking up. Now, you can see that the solid line is going to be the actual earnings per share, and the dotted line is going to be the estimated earnings per share. Who puts out the estimated earnings per share? Sometimes the guidance comes from the company itself. Sometimes it comes from analysts. It just varies from that standpoint. But with the estimated, you can see as the months and quarters have ticked off for this company, every single quarter they have beat the estimates. And that's really good for a stock. So if we're looking for a stock that's going to last us for a long period of time and make profits, I think that this stock would qualify for that because the earnings per share is actually really pretty good. We just went back through 2015, but you can go back further. If you have an interest in this, just send me an email. I can give you more information on the historical dividends of it. I'd be glad to do that for you. Send me an email to van@richardsfinancialplanning.com. And I'll do a little shameless plug here. If you need some help with your retirement plan or with your retirement planning, you can get in contact with me. Go over to my website at richardsfinancialplanning.com and you can request a time to talk to me. Just click on the Learn More button. You'll see it down there. It's kind of teal colored. We'll talk about that at the very end too. Okay, so let's get off that and keep going on. Oh, I love this. This is great. Okay, it's going to be great. Even grow.
The beauty of your side.
Okay, we hit the right button there and everything went. All right. So the idea here is we're talking about stock dividends. If you are retired or you are thinking about retiring, there are only 3 reasons to use stocks in your retirement plan. Number 1 is going to be growth. Why growth? If you're retired, you've probably heard it from different sources that you need to have less stocks in retirement. Well, that's maybe true and maybe not true. And the reason why that it's maybe not true is because if you're retiring and you're in your 60s and you're thinking of where you're going to be spending money in your 70s or your 80s, growth is definitely still a part of your retirement strategy because you have to look at the concept of inflation. Inflation is like, okay, the cost of goods going up. You know that if you've been around for a little while that things go up in price. I can remember buying a car for $500 a month and it was a brand new car. You can't get a brand new car nowadays, not unless it's going to be, I don't know, a very, very inexpensive car for $500 a month. Most of them are going to be more expensive than that for a regular mid-level size car. Okay, but that's another different story. The idea is growth is the first reason. The second reason is going to be dividends, and that's what we're going to talk about. And the third reason is just going to be diversification. Okay, so let's talk a little bit more about dividends. Let me get you back into the stream over here so that we can talk about the dividends on this company. Okay. If we look back over the last quarters, if you were thinking that you want to use any stock for retirement dividends, the first thing that you need to do is you need to look at what the consistency is of those dividends. Now, what I did is I didn't go back a long time. What I did is I went back to 2019 to the fourth quarter of 2019 and looked at what the payout was on the dividends per share, and it was 85 cents a share. Just recently in the last quarter, in the third quarter, it went up to 90 cents. So things are going pretty well at KLA. They have a 2.02% forward dividend. So that works out pretty good. But remember also, I'll tell you again, the past performance is not a guarantee of future results. And you have to make sure that these investments fit into your overall strategy. I'm not here to tell you this is what you should buy. I'm here to tell you you need to plan, and this could be part of your plan. Okay, let's keep moving on from what's going on. Remember, the third thing that we look at when we look at stocks is what? We look at how they compete with other companies. So KLA does have competition, although they do dominate. They also compete with Applied Materials, Onto Innovations, and Maxim Integrated Products. Now, when we look at what's been going on, we can see that KLA is in blue. If you follow the dancing cursor, you know what happened in between February and March. That's where the coronavirus market crash hit. Then things picked back up. And as we have seen, KLA has excelled beyond its competition quite well from this standpoint. So they are competing very well. There again, past performance is no guarantee of future results. Now, one of the other good things about KLA is this. They have a wide moat. If you listened to me before, you know what a wide moat is. A moat is going to be the barrier that a company theoretically digs in between them and their competition. And KLA has a wide moat. There's not much competition that is out there. Right now, when we look at KLA, they have a very unique technical expertise. The other thing that's going good for KLA is that they have a subscription-like service contract. It's not really a subscription service, but it's a subscription-like service. So if you have a company that is utilizing their monitoring systems, their machinery for monitoring, they have engineers that will basically go along with that and help on a regular basis. And that's really, really important, because when we're talking about the types of machinery that KLA produces, the specifications are very, very thin. In other words, they have to be very precise, exact. And it has to be monitored on a regular basis, and it has to keep cranking out at a certain level and also within certain margins for it to be useful. And that's one of the unique technical expertise that KLA has, is that they're able to perform better than their competition in monitoring. And if you have better monitoring, you have a better product. That's going to be the bottom line from that standpoint. Okay. They also occupy 50% of the process delivery control market. You'll hear it referred to as PDC. In the PDC market, they dominate from the standpoint of where they are at. Every major player out there that makes chips uses KLA. Okay, and as we keep going on, at this point, what we do is we take a look and see what the fair market value is. And I utilize Morningstar's information in this space, because I think Morningstar does a really good job of analyzing what's going on. They don't look at the emotional aspects of it. They just look at the earnings per share after taxes and expenses, et cetera. But they look at the earnings per share and they take a multiple of that. And that's basically, not fully, but it's basically how they get the fair market value. As I mentioned, the closing price today was $180.76, and what Morningstar is saying is that the fair market value is $190. So what that tells us is this stock is actually trading at a discount of 4.86%. So this warrants 3 stars from Morningstar. Now, what are some of the other analysts out there saying about this stock? There's 13 other analysts that we polled to see what they were saying about it. 5 of them said that it was strong, and then we had 8 of them that said that it was a hold. Now, when we factor in and do the math on that, though, this is what it comes out to be. This particular stock is still a buy. It's not a strong buy. It's just a moderate buy. Okay. Remember, though, this is not a recommendation from me. You have to call me up on the telephone, talk to me about your portfolio before I give you a recommendation. This is just a report to you of what is going on, and I'm reporting to you what other analysts are saying. Okay. Now we're going to get into the cheese of the thing. Okay. I love this. Kraft Heinz company. They have 2 things there that I just dearly love. One is Kraft macaroni and cheese. Oh, I love Kraft macaroni and cheese. I also love Heinz ketchup. So with those things, what could be better? Okay, but let's look at what's going on though. Because if you listen to the news any today, turn on the news a little bit, you're going to see that Kraft Heinz is actually selling off some of its cheese business. The Cracker Barrel brand will be part of what goes. Don't worry, the macaroni and cheese part is still staying here. But the Cracker Barrel brand and some of the other cheese businesses are being sold off to, pardon me if I look real quick, it is a French company, and it is called, I'll come up with it a little bit later, but it's being sold off to a French company. So let me keep going on though. It closed up the day just a little bit, but when we look at what's going on, we had a year ago, it was selling for $26.61 per share. Today, it closed up at $31.97. So we've seen a pretty good increase, 15.78% for a food company. In essence, it's a big food company, third largest in the United States, but it closed up about 15%. Here's one of the best parts about this stock. It's the dividends. For a dividend paying stock of a big growth company, 5.02%. And actually, that's a little bit less than it was previously, because when we look at what happened prior to 2019 and 2018 and back, it was actually paying 63 cents a share. But in the first quarter of 2019, it went down to 40 cents per share. But that's still a 5.02% forward dividend. And that's one of the big attractions to this stock is if you're out there and you're looking for stocks to pay a dividend for income, this is the stock that you should consider. Again, you have to talk to me specifically about your situation before I say to you, yeah, you sitting right there or in the car or wherever you're at with your phone watching this, is this stock for me? You got to call me up and talk to me about it. And you can do that by going to richardsfinancialplanning.com, find a time, and you'll be able to set up 15, 20 minutes. You can ask me whatever questions you want for free, and then we can see if there's a basis for doing business in the future. Now, earnings per share, remember one of the three things we look at: stability in the business, and we look at competitiveness, and then we look at earnings per share. Well, the earnings per share is a little bit dicey when we look at it over here at Kraft Heinz. I don't want to enlarge that for you just a little bit. Remember that the actual earnings per share is going to be the solid line. The dotted line is going to be the estimated. And we see that in 2015, they were over top of the estimates. They bounced around a little bit. Then we saw in 2019, if it wouldn't have been for the coronavirus pandemic, they probably would have been under what their estimated earnings were going to be. But since there's been so many people staying at home and cooking at home, that's actually been a good thing for the retail food business. And you know that if you've tried to get groceries from the grocery store, the supply chains were interrupted quite a bit when we first started this whole thing in March and February. Okay, but as of now, they're actually back on track and doing pretty well. As I mentioned, they're going to be selling off a significant portion of their assets, around $2 billion worth of assets. But remember, this company is in total, if you look at Kraft itself, Kraft is a $39.4 billion company. So to sell off just $2 billion is not really a huge number, but it's significant enough that it could impact their future profits, and it may affect their dividends. So we'll just have to wait and see how that goes. Now, how is Kraft Heinz competing against other companies, other food companies? We look at Campbell's Soup, and if you look at the graph that's in front of you, the spaghetti graph, you can see that the blue is going to be Kraft Heinz, and they were a laggard at the beginning of the pandemic, and they've actually come out to do very well as time has gone by. And I think that one of the things that they're doing also now in cost cutting is, yeah, they are shedding some of their assets, but they're also changing their strategy. They're going more for the the quick food, the prepared foods from that standpoint, because that seems to be what society is more into at this point in time. But Campbell Soups is one of their competitors, and Campbell's is in red. And you'll notice back over here that all these companies, let me put the rest of them up here, then I'll talk about what happened here about the beginning of the month. Conagra Brands is also another competitor, and then General Mills also. So if you follow the dancing cursor, you'll see that over here on the right, we had a pretty big drop at the beginning of the month in all of these different stocks. And that was kind of a sell-off of what was happening in the market for some of these companies. And it hasn't quite come back to the level that it was, but part of the sell-off is just that the market came back so quickly, so fast. There's nothing indicative of Kraft Heinz that's making it go down in value. It's just that that's what's happening with stocks in general. Because the reason I say that and feel confident about saying that is look at how the other companies reacted in the same time period. Now, a few moments ago, when we were looking at KLA, one of the reasons why that KLA had such a drop was because of what the Defense Department said about tariffs. In this particular case, when we're looking at food companies, it's just that the market is kind of recovering and relieving from that standpoint. It's just kind of an ebb and flow of the market from that point of view. All right, let's keep going on. Remember, though, as I tell you again and again, the past performance is not a guarantee of the future results. Now, we talk about moats. And when we talk about Kraft Heinz and their moat, they don't have one. The reason is there's really no cost advantage to buying Kraft Heinz as there is to buying Kroger brand or Safeway brand or whatever the case is going to be. Their reputation carries them a long way, but they are looking for other ways to make inroads into the market. They don't really have a moat at this point in time, so they're looking at other cost-cutting avenues. One of the ways is what I mentioned a little bit ago, where they're selling off the part of the cheese business to the French company, and that's the divestiture. Okay, what is Morningstar saying about Kraft Heinz? Today they closed at $31.97. The fair market value is at $48. Now, if you've listened to this before, you understand the star system, the way that it works for Morningstar. It doesn't mean that it's a great company. Yes, Kraft Heinz may be a great company, but that doesn't mean that it's a great buy right now. What it's telling you is that it is trading close to it or below its earnings per share. So with this particular company, their fair market value is actually higher than where they're trading right now. So what that tells us is that this stock is trading at about a 33.4% discount based on the close of the market today. And with Morningstar, that warrants 4 stars. Now, what are some of the other analysts saying about this stock? You've got 5 of them that are saying that it's a strong buy. You've got 5 of them that's saying, you have 5 that's saying it's a strong buy, 5 that's saying that it's a hold, and 1 saying get out of Dodge, sell from that standpoint. So when we average all those together for this standpoint, we still come out with this. We come out and find out that it's actually a moderate buy. Not a strong buy, but still a moderate buy. And remember, this is not a buy-sell recommendation. This is just education on what's going on with this particular stock. Okay, I'm going to remind you again, I've told you before that if you want to talk to me about your stocks, if you want me to analyze what's going on, to give you an estimate, talk about the earnings per share, talk about dividends, and how all of it's going to fit into your retirement, then go over to richardsfinancialplanning.com, go down to the teal button that you see that's in front of you right now called Schedule a Call to Learn More. Click on that, and you can find a time to get a chance to talk to me. Okay, so if you have questions, so there's 2 things I want to tell you before we leave for the day. Well, number 1 is make sure that you subscribe, because today I was running behind about 15 minutes. And if you like the information that I provide, you would get a notice that would say, hey, Van's running behind a little bit, so I'm going to watch this on the replay, or I want to tune in today at 5:15. Most days we're at 5 o'clock, some days a little bit later, some days maybe a little later. but most of the time at 5 o'clock. So with all of that said, I want to say thank you for joining me today. And if you've got questions, enter them into the platform, whichever one that you're listening to, whether it's going to be on Twitter or Periscope or Facebook, any of the platforms on Facebook. I've got 4 of them that are listed, or over on YouTube. You can also subscribe, and I highly recommend subscribe to YouTube. Hit the subscribe button, hit the bell, because if you subscribe, then you'll get all the other information that I put out there that's for you to help you so that you can retire without running out of money. Okay. So with that said, I'll say thanks a lot, and I'll talk to you tomorrow.